is. But I just want us to, before we go into corporate finance, I really want us to look at what finance is so that we can start from there. And here we are looking at what finance is. We're looking at finance and the how the categories of finance is what we are looking at. Then the definition of finance this morning says that finance is a term for matters regarding the management, creation, and the study of money and investment. It involves the use of credit and debits, security and investment to finance current projects using future income flows. Because of these temporal aspects, then finance is closely linked to time value of money. So when we talk about finance, we talk about the time value of money, what money is, and we all know money is a legal tender, as finance also a legal tender, then also the interest rates and other related topics. And finance is also is broadly divided into two categories. And we have the public finance, we have the corporate finance, which we are really dealing with today. Then we also have the personal finance, and there are many other specific categories, such as the behavioral finance, which seeks to identify the cognitive, that's the emotional, the social, and the psychological reasonings behind financial decision. Now we have some keywords, and I want us to just quickly look at these keywords before we move on. We have the finance in time, broadly describing the study and the system of money, investment, and other financial instruments. Finance can be divided broadly into three distinct categories, and we'll talk about that. Then also we'll talk about the public finance, corporate finance, and also the financial. Then we also look at recent subcategories of finance, including social finance and behavioral finance. Then also the history of finance and financial activities dating back to the dawn of the civilization, where it has roots in the scientific fields such as statistics, economics, and also materials, also mathematics. The financial also include the non-scientific elements that like art. So we've been able to really describe what finance is, and also we look to understanding finance, and we know that finance is typically broken into three broad categories, which we've already said. Then some key finance terms that we need to talk about. Also, we are looking at the asset. Look at asset. Asset is something of value, such as cash, real estate, or property, or tangible or intangible assets. And also have the assets. We talk about the fixed assets, and also we also talk about the current asset. We also look at liability, and liabilities is a financial obligation such as debt. Liabilities can be current, also long term. And we also look at the balance sheet. The balance sheet is a document that shows a company's asset and its liability. So subtract the liability from the asset to see the firm's net worth. Once you remove your liability, you get your net worth. Then we also look at the cash flow. The cash flow is the movement of money into and out of a business or household. We talk about the cash flow, talk about different types of cash flow. Yes, that we talk about cash inflow, cash outflow, and we also look at the cash spent within the organization. Then we look at the compound interest also is there. Unlike simple interest, which is interest added to the principal one time, compound interest is calculated and added periodically. This results in the interest being charged not only on the principal, but also on the interest already accrued. Then we also have equity. Equity means ownership. Stock are called equity because each share represents a portion of ownership. Then we also look at the profit. Profit is the money left over the expenses. Then a profit also loss statement shows how much the money has earned or lost for a particular time. Well, there are history of how finance started. Well, I will not get that into that because that's not. I just want us to look at how it is, and that I've been able to really share that. And we've talked about different types of finance, the corporate finance and others. Then we look at them. But my main objective today is we are looking at corporate finance, and I want us to go back to what corporate finance is and how it can be used to benefit our firms. So let's look at corporate finance. So corporate finance is a subfield of finance that deals with how corporate addresses funding to fund your sources, and there it is also divided into into three places. When we talk about the funding, we look at the capital funding sources, and we have three major funding for sources. There we have the capital structuring, the accounting and investment decision. Then we have that thing. We'll work upon that later when we meet. Then we'll also look at corporate finance. It's often concerned with maximizing shareholders' value through long and short-term financial planning and the implementations of various strategies. So corporate finance activities range from capital investment to tax consideration. So we look at some keywords that we look at now, and those keywords are we say that corporate finance is concerned with how business fund their operations in order to maximize profit and minimize costs. Two, it deals with the day-to-day demand on business cash flow as well as with long-term financing goals. Then issuing bonds. Then also corporate finance also deals with monitoring cash flow, accounting, preparing financial statement and taxations. Also, we also look at it. It determines whether or not to issue a dividend is another corporate finance activities. Then also we look at corporate finance job and can pay attractive. So we also move on to understanding the corporate finance. And so we say a corporate finance department are charged with managing the firm's financial activities and the capital investment decision. Such decisions include whether to pursue a proposed investment, whether to pay for investment with equity, debt, or both. We talk about the debt, whether how to pay for the debt, whether through equity or debt, or both of them, both equity and debt. And then we say that they also include whether shareholders should receive dividends, and if so, at what dividend yield. Now, normally, there are policies. There are lots of policies that are being used when it comes to the issue of dividend payment. There are policies that are being used. So we also say that a company corporate finance activity are often overseen by the chief financial officer. Then let's look at some of the corporate finance activities. There are a lot of corporate finance activities that I want us to see. The number one of it is the capital investment. The capital investment, one of the things that they do is that they invest. When there's a project, they do an investment. The capital investment decision process is primarily concerned with the capital budgeting. And when we talk about capital budgeting, we are talking about expenses that are very high. Through capital budgeting, a company identifies the capital expenditures, estimate future cash flow from proposed capital projects. Then company compares planning investment with the potential proceeds and decide which project to include in its capital. Then also the we also look at the making capital investments is perhaps also the important corporate finance tax and can have serious business implication. Poor capital budgeting, e.g., excessive investment or underfunded investment can compromise a company's financial position, either because of the increased financing costs or inadequate operating capacity. And we also say that the corporate finance includes the activities involved with a corporate financing investment and the capital. Then we also move on to capital financing. Apart from the capital, then we look at capital financing. It also involves sourcing capital in form of debt or equity. Then a company may borrow from a commercial bank and other banks, intermediaries, or may also issue debt securities in the capital market through investment banks. Then we also look at the companies. We also choose to sell share to equity investors. Then especially when it needs large amount of capital for their business. Then the capital financing is a balancing act. Involve decision about the necessary amount of debt or equity. Having too much debt may increase default risk, and relying heavily on equity can also dilute earning and value for early investors in the organization. Then we also move on to the third one, which is the short-term liquidity. The short-term liquidity, we say a corporate finance department is also tasked with the short-term financial management. The goal is to ensure that there's enough liquidity to carry out continuous operation. Short-term finance manages concern current assets and current liability, and so we look at Sister Pelumi. So we look at that, and when we look at that, we are also able to understand what is going on. Then we also look at the other area in the business finance. We look at other area and also from the capital structuring, we are also looking at an area in the business finance that will help us also in what we are doing. So we look at the so we also look at the short-term financing is also used to manage our battery slow. So that's check on the closer. So we look at it from that angle, and also we move on. Let's move on from the next thing that is the short-term liquidity. The short-term liquidity also help us to have a 69%. What do I do now? Use your phone. You can't use your phone. I don't understand my phone. This thing. I didn't put it on my hand. No. It's on my where I worked. My word. Can I send it to my phone? No, Word now. That is.
Can't you teach outside the Word?
I can teach, but I have to load it up here. Can I put it on hold?
I don't even know where you see lights like this.
But no, you will get to ask the market, so we'll find we around. Ṣé kò sí ọkọ̀ tó sọ́rí mà? Ṣé kò sí ọ̀tọ̀ tó ní generator bèbà? Yes. Ẹ káàárọ̀ sà. Ṣé any generator kẹ́ bá mi tẹ generator mo wà online? Battery mi dẹ̀ go low.
Mọ́tò wa náà gba àgbéjáde.
Good morning, dear. How are you? It's a big condition. You can mark it.
If you go, if people talk, tell them you meet them up in the next. Well, get to talk and see. Meeting them, should we meet them for something? Some people that have them, they not tell you they don't have them.
Don't even know how I'm going to.
Use your phone.
How do I use my phone?
Use your. Should you want to do meeting with them? Let them be telling you the steps that is next. Tell them that your system is off and you cannot go on. Who is that? His name. Yeah. If you have somebody you have a couple that can tell you that there's in you or something, it will get. Couple months later, you know, àwọn ìpàdé máa ń níná ju àti ìmọ̀kẹ́ṣẹ́ àti kíkẹ́ṣẹ́ àwọn ìpàdé máa ń níná. Wọ́n máa ń níná ju ibi báyìí lọ. Kéèyàn ó bó tu kìíní. You can share your screen and be doing this thing that you are doing. When I go now, you now ask me that how do I share my screen? I will not be able to explain to you.
How? Share it this way.
You can share your screen.
It's on the world.
That you can share your screen with your phone. Even on this laptop, you can share your screen.
But it's not on my phone now.
Is it not Gmail used to send it?
This thing is on the world. I have not transferred to my Gmail.
Have you transferred it to your students?
No.
You can still go to your school. I don't know. One thing for you, she said she has done that. Actually, I have left. It's my ash.
Ilé ìgbọ̀n kó yẹ kó click kò tún click.
Anyway, Ambassador Chad, alone.
In the night, it was this morning I discovered, morning battery tele. It was this morning I discovered that money class. You need to click, but me click, then me more click and I go this one.
This picture now.
It's not picture now.
Wait, can we copy? Continue your class now.
The battery can go.
Nana.
Hello, sorry for the delay there. I'm having a network issue here. So we look at also, we've seen the short-term liquidity. Then the next thing is we are looking at working in a corporate finance, and we don't need that. Working on the corporate finance, we look at positions like the chief financial officer, financial planning, and also analyzing manager. Then also the cost analysis, also the financial analysis, the treasurer, and those are the things. Then can I transfer this to my? How do I do that now?
Maybe you save it. Okay, Gmail on it.
Gmail for lower.
Open your Gmail this system and transfer it.
It's on Gmail. Just my Gmail.
Are you on your Gmail? Gmail is on Gmail.
System. Okay, I understand.
I don't understand. Maybe this is the course you are teaching.
No, that's not the course. The course is not here. It's on the world.
Send it to your Gmail.
How?
Just send. You send it to yourself again. Send it to yourself. I used to do all these things. I'll send it to myself. My own file, I'll send it to myself. You can send it to anybody. Send it to me. Send it to everyone. Then you open it on your phone. You go to your send.
It's not sending here.
You cannot send it. Go to your Gmail. New folder. Oh yeah, attach.
Please, sorry, I'm having a network issue.
I think you have something to that, but it's not there. It's not there.